So chapter 3, audit risk and risk assessment. This is part 1. So audit risk is simple thing. Audit is the auditor expresses an inappropriate opinion when financial statement are misstated. Okay, so it can be divided into two parts. The first one is risk of material misstatement and detection risk. So in this risk of material misstatement, it can be inherent risk or control risk. So what is not included in audit risk? The risk that auditor expresses an opinion that financial statement are materially misstated when they are not. Matlab he told that they are materially misstatement, but it is not. It is not included in the audit risk. Okay, and audit risk is a technical term and related to process of auditing, and it does not refers auditors business risk such as loss from litigation, adverse publication, or any other effect arising from the audit of FS. Okay, next components. The first one is risk of material misstatement. In that, inherent risk. So inherent risk is a susceptibility of an account balance of or class of transaction to a material misstatement, assuming that there are no internal control. Okay, so here there is no assume that there is no internal control, and susceptibility of the account balance or class of transaction. So it is like risk of material misstatement is an assertion because of its nature. So it is higher when some assertions are related to class of transaction, account balance, and than others. So for example, higher calculations and can be given substantive procedure. Risk assessment factors are considered while designing of test of controls and substantive procedure. Okay, these are just examples. Just read off. Next is control risk. So the risk that material misstatement that could occur in an assertion that will not be prevented, detected, or corrected on a timely basis by entity's internal control. Next, it is either because of IC is missing, internal control is missing, or internal control is not operating effectively, or there is a flaw in the design. Next, there exists an inverse relationship between control risk and efficiency of internal control. So just read this example, normal one. But both internal risk and control risk, now this is entity's risk and it exists independently on the audit. That is, this is not influenced by the auditor. Next, risk of material statement exists at two levels. The first one is at assertion level, then is first one is at financial level, then at assertion level. So in assertion financial statement level, it affects the financial overall or as a whole, and in assertion level, so only for class of transaction, account balance, or disclosure, that is EC, that existence, complete, and occurrence, valuation, presentation, and any line items of FS. So risk of FS risk at the FS level are pervasive in nature and therefore may affect many assertions. For example, the risk that going concern basis, it may be inappropriate. In that case, overvalue of asset will be there, omitted liabilities will be there, and omitted disclosures will be there. So when it comes to risk at assertion level, it may be assessed to determine the nature, timing, and extent of further audit procedures necessary to obtain the sufficient and appropriate audit evidence. Next, detection risk. It is a risk that audit procedure performed by the auditor to reduce the risk at acceptably lower level is not detected and will not detect a misstatement. So it is a risk that procedures performed by the auditor to reduce the risk to an acceptably low level will not detect a misstatement. So it can be either due to two reasons. First one is sampling risk and non-sampling risk. So sampling risk is a simple thing. It arises from the possibility that auditor's conclusion based on the sample may be different from the conclusion reached if the entire population was subjected to the same audit procedure. So like it can be when audit concludes that C or control risk is low and then of material misstatement, and it does not exist. In fact, it does. So the higher so he says that material misstatement does not exist, but in fact it does. So higher risk of inappropriate audit opinion may be there, and it affects the effectiveness. So same case, he says that control risk is higher than what actually is. In that case, material misstatement will not exist, but in fact it does exist. Higher. Then as more work may be required, so it affects the audit efficiency. Then non-sampling risk, simple non-sampling risk arises from the factors that cause the auditors to reach erroneous conclusion for any reason not related to sampling. Okay, so this may be failure to understand the entity or to carry out the risk assessment, in inadequate audit strategy, planning, or even working program. Or it may be because of misapplication of audit procedures by the audit team, audit team lack training and misinterpretation of test results, like recognizing or not recognizing any error, and it can be because of poor quality management. So non-sample risk can be minimized through, for example, adequate planning and assigning appropriate staff, experienced or professional technical competent, and application of professional judgment, supervision, and review of audit. Simple. There are two examples to study. So relationship audit risk is risk of material misstatement into detection risk, and so risk of material misstatement can be classified into two things, that is inherent risk and control risk. So it is simple thing. Okay. Assessment of risk a matter of professional judgment, and rather it is a capable of precise, it is rather than the matter of capable of precise measurement. Okay. So combined assess risk of, so in usual accounting standards inherent risk and control risk, they combine together, and but auditor may assess separately and even combinedly. So risk assessment can be quantified, it can be in percentage or it can be non-quantified, saying high, medium, and low. And suitable risk that requires special audit consideration. This is important. Okay. So the first one is where and all special audit consideration is required. First one, when there is fraud. Second, when the risk is fraud. Second one, when there is recent economic, accounting, or any other developments, changes, or regulatory, like changes in regulatory or environment. So therefore it requires special attention. Third one, where there is complexity of nature, complexity of transactions, whether the risk involves significant transaction with related parties, when there is subjectivity of measurement of financial information related to risk, especially those involving a wide range of measurement uncertainty, and whether the risk involves significant transactions that are outside the normal of course of business and otherwise appear unusual. Simple. Like there are 1 2 3 4 5 6 transactions. Remember the first one, where there is fraud. Second, where there is significant accounting, other development, recent changes. Third one, there is complexity transaction. And fourth one, where there is significant transaction with related parties. Fifth one, that there is subjectivity of measurement. And sixth one, when there is significant transaction or outside the normal course of business or any unusual transaction. So identifying the significant risk, significant risks are inherent risks, both higher likelihood of occurrence, and it can be higher magnitude of potential misstatement. So this significant risk arises because of non-routine transaction or judgmental matters. Non-routine transactions are unusual or because of their size, nature, and they occur infrequently. And judgmental matters are development or accounting estimates which there is a significant measurement uncertainty. So the auditor's judgment, the auditor assesses assertions affected by the significant transaction as higher inherent risk. The following can be significant risk, that is due to fraud and error, or that significant transactions are with related parties. So this question is important. So risk of material misstatement greater when there is non-routine transaction. So examples for non-routine transactions are where there is great management intervention, when there is manual intervention, and where the complex calculations in accounting principles are there, and the nature of the non-routine transaction make it difficult to implement the controls. So there are four. First one, there is when there is greater management intervention, when there is manual intervention for data collection and processing, and when the complex calculations are involved in accounting, like complex calculations or accounting principles, and when the nature of accounting non-routine transaction makes it difficult to entity to implement the controls. Then due to significant judgment, only two are there, when the accounting principles or estimates or revenue recognition may be differing interpretation, and where required judgment may be subjective or complex, and required assumption about the nature of future of events may be about the fair value. Then the last topic, essay 315. So identifying and assessing the risk of material misstatement through understanding the entity and its environment. So objective of the auditor is identify and assess the risk of material misstatement, whether due to fraud and error, at the financial statement and assertion level, through understanding the entity and its environment, even including the internal control, and thereby designing implement responses to assess risk of material misstatement. This helps the auditor to reduce the risk of material misstatement to acceptably low level. So risk assessment process. So the purpose of identifying is because of four things. The first one is identifying the risk throughout the audit procedure, identifying risk throughout the process of obtaining the understanding of the entity, environment, and its relevant controls and class of transaction, and assess the identified risk. Whatever risk you have identified, now you have to assess this and evaluate related to whether they relate to more pervasively to the financial statement as a whole or potentially affect any assertion, and evaluate whether the same identified risk can go wrong at the assertion level. First you have to go for financial level, then at assertion level, taking into relevant controls that auditor intends to test, and consider a likelihood of misstatement, including the multiple misstatement, and likelihood of misstatement. Then risk assessment procedure, simple thing is risk assessment procedures are performed to obtain understanding of the entity and its environment, including the internal control, and identify the material misstatement as at financial and assertion level. Simple. So what are the components? Inquiries, observation and inspection, and analytical procedure. So what is inquiry? Inquiry of management and others within the entity means information obtained through inquiry from management, those who are responsible for financial reporting, from others within the entity, for the employees with a different level of authority, helps in identifying the risk of material misstatement. And simple, inquiry alone is not sufficient. Examples for inquiry, that is from whom it can ask, like financial reporting heads, or from the authority levels employees. Like the first one, he can ask with internal audit personnel about the control design. Next, he can inquire with the employees who handle the complex transaction and clarify about the accounting principles. He can ask with the legal counsel about the litigation, compliance, fraud and warranties and all. He can go with the market personnel, and he can ask the market strategy, sale trends and more. And he can inquire for a risk management, and that can highlight the impact on financial reporting. He can ask for information system personnel that detail failures, change in related risk. Analytical procedures. Simple. Analytical procedure may help identify the existence of unusual transaction events and amounts, ratios and trends. So analytical procedures may help to identify the existence of unusual transactions, events and amounts, ratios and trends. That may indicate that have audit implications. So unusual and unexpected transactions have identified to risk treatment, and this is important. Okay, so analytical procedures using high level aggregated data, often employed in risk assessment, offer a general initial and potential misstatement, and simple, maybe in initial finding. So observation and inspection. Simple thing. So observation and inspection are required to support and corroborate and same thing, and contradict inquiries, and to provide information. So examples are like what you observe and inspect. The first one is entities operation, entities documents or records or internal control manual, entities report prepared by management and those who are charged with governance, and the last one is premises or the plant facilities. And this is not that important. Next, the important one is understanding the entity and its environment. So understanding the entity's environment through understanding the assessing the risk of material misstatement through understanding the risk and its internal environment and its environment. State the auditor obtain understanding of these following factors. There are 5 factors you have to understand. The first one is relevant industry, regulatory and other external factors, including financial reporting framework, then the nature of the entity, then the selection and application of accounting policies, and the entity's objective strategies, so that and those related to business risks that may result in material misstatement. And the last one is management and review of entities financial performance. 5 things. First one, relevant industry and regulatory and other external factors, nature of the entity, selection of accounting policy, objectives and strategies that related to business risk, and the measurement and review of entities financial performance. So when it comes to relevant industry, just read this like competition, suppliers, industry matlab, regulatory factors matlab financial reporting standards, legal and political, and external factors matlab economic climate and interest rates. So nature of entity, this is important. So it says which it includes operations ownership and governance structure, types of investment that entity has made, including the investment made in special entities, and the way entity structure, how it is financed. Okay. It enables the auditor to understand the class of transaction, account balance, disclosures, and expected in the financial statement. To understanding an understanding of nature of an entity enables the auditor to understand whether it has a complex structure or not, whether like matlab subsidies or not. And understanding the complex structure helps to identify the potential misstatement risk. Understanding the ownership and inter entity personnel helps to relate. Ownership and inter-entity personal relationship helps to ensure related party transactions are properly identified and recorded. And this one is same thing, business operation revenue. This one is like not that important. Okay. This one, why understanding the entity and its environment is significant. It helps in planning the audit and in identifying requiring special transaction. Gaining knowledge on the client's business is one of the important principles in developing overall audit plan. In fact, without knowledge of the client's business, the proper audit is not possible. Next, understanding the entity is a continuous process. Same because it establishes the frame of reference within the audit plans. So what and all, like for example, assessing risk of material misstatement in financial level, and determining materiality according to SA 320, considering the appropriateness and selection and application of accounting principles, identify whether any areas require special audit consideration may be necessary, and then developing expectations when the use of or when expectations for use when performing analytical procedures, and evaluating sufficiency and appropriateness of audit evidence. So understanding the entity is a continuous process. For example, assessing, like it is a matter of judgment, it is continuous dynamic process, and all you just write it. And the important points you have to write is assessing the ROM, risk of material misstatement, determining the materiality, considering the appropriateness of selection and application of accounting policies, identifying the areas which require special audit consideration, developing expectations from performing the audit procedures, and evaluating sufficient appropriateness of audit evidence obtained. So done with part 1, we'll go to part 2. So chapter 3A, internal control. So meaning of internal control is simple thing. As per 315, the process of design, implement and maintain. The process designed, implemented, maintained by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of entities' objectives with regard to reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, and compliance with applicable law and regulations. These two lines are not that important, and go for objectives. This is important. So there are 4 objectives. The first one is transaction must be executed in accordance with management general and specific authorization, and the 2 are related to recording. All transactions must be properly or promptly recorded in a correct amount in appropriate accounts and accounting period which they are executed. And the second one is recording transactions properly enables preparation of financial information with framework recognized by accounting policy and practices, compliance with industry statutory requirements, and maintenance of accountability for assets. So asset safeguarding must be done, and assets must stay safeguarded from unauthorized excess, use, or disposition. And account reconciliation, recorded assets must be compared with existing assets at reasonable interval, and appropriate action must be taken with regard to difference discovered during the comparison. So benefits of audit are these 3 are important, and the first benefit is identifying the types of potential misstatement, identifying the factors that affects the risk of material misstatement, and designing the nature, timing, and extent of further audit procedure. And then limitations of internal control. The first limitation is it can only provide reasonable assurance, human judgment, like judgment in human decision, lack of understanding the purpose, collusion among the people, judgment by the management, and limitation in case of small entities. In case of small entities, the owner is a manager, and he might segregation of duty is not possible, and in that case he might, on the other hand, he may be able to override the controls because of the system of internal control is less structured. Limitations, the first one is it only provides reasonable assurance, it involves human judgment, and lack of understanding of the purpose, collusion among the people, judgment by the management, and last one, limitations of small entities. What are the components of IC? There are 5 components. So first one is control environment, RAP, risk assessment entities, RAP, and information system, control activities, and monitoring of controls. The first one is control environment. So it is a here the audit shall obtain the understanding of the control environment as a part of obtaining the understanding. Environment as a part of obtaining the understanding. Now, he should evaluate whether the management has created and maintained a culture of honesty and ethical behavior, and the strength in control environment elements collectively provide an appropriate foundation for other components of the internal control. Matlab, the first one is it should have a culture of honesty and ethical behavior, and second one is and it should provide a foundation for other components of the internal control. So what is included in internal control? There are 2 things that is included. The first one is governance and the management functions, and the second one is attitude, awareness, and actions of those who are charged with governance and the management. So control environment sets a tone for organization, influencing the control consciousness of its people. So elements of internal control, this is like very tough kind of elements of internal control, matlab relevant control that may be relevant in obtaining the understanding of control, including the following. So what are the relevant elements? Okay, the first one, communication and enforcement of integrity and ethical values. Second one, commitment to competence, participation of those who are charged with governance, like their independence should be there, the experience and status should be there, and the management philosophy and operating cycle, like their approach in taking the management risk, attitude and actions, and attitude towards information processing. Then organizational structure and authority and responsibility, assignment of authority and responsibility in human resources, policies and practice. Elements of control environment. The first one, communication, enforcement of integrity and ethical values, and commitment to competence, participation of those who are charged with governance, management philosophy and operating cycle, organizational structure, assignment of authority and responsibility, and human resources, policies and practices. Satisfactory control environment is not an absolute deterrent to fraud. Simple, the existence of satisfactory control environment can be a positive factor when auditor assesses the risk of misstatement. However, this may be help to reduce the risk of fraud. A satisfactory environment is not a deterrent. However, a positive factor and can reduce the risk of fraud, but it is not an absolute deterrent. Conversely, a deficiency in controlling management and undermine the effective control and the sustained. A control environment also influences the nature, timing, and extent of further audit procedure. Okay, and the control environment does not prevent or detect and correct the material misstatement. It may, however, influence the auditor's evaluation of effectiveness of other controls. Then control environment, it is a positive factor. It helps to reduce the risk of fraud, and it is not a absolute deterrent, and it also influences the nature, timing, and extent of other audit procedure. It does not prevent, detect, or correct the material misstatement. However, it may influence auditor evaluation in effectiveness of other controls. Then entities risk assessment process, or it is a component of IC. So there are 1, 2, 3, 4. The first one is identifying the business risk relevant to financial reporting objectives, estimating the significance of the risk, assessing the likelihood of occurrence, and deciding about the actions. So entities RAP. Fourth thing, identifying the business risk relevant to financial reporting objectives, estimating the significance of risk, assessing the likelihood of the occurrence, and deciding about the actions. And information system. So what are the factors related to business process relevant to, including are the first one, the class of transaction, entities records is significant to financial statements, and the procedures by which those transactions are initiated, recorded, and processed correct necessarily. And the third one, accounting record supporting the information. Fourth, an information system capturing events and conditions. And fifth one, financial reporting process used to prepare the entity's financial statement. And the last one is control surrounding the journal entries. So information system, this is just like what we say, IT kind of thing. The auditor shall obtain an understanding of the information system, including the related business processes relevant to the financial reporting. So what are the things he has to obtain? Like understanding the class of transaction, the procedure by which transactions are initiated, the related accounting records which support the information systems capturing the event and conditions, and financial reporting process that prepare the financial statement, and the controls that are surrounded by journal entries. So this one they have asked before, so just study normally. So control activities, understanding the control, the audit, and necessary for assessing This and all, no bro, simply like no use. Okay. Are all controls relevant to the audit? There is a direct relationship between entities' objectives and control, and implements to provide the reasonable assurance about their achievements. However, not all objectives and controls are relevant to audit risk assessment. So factors relevant to audit that are materiality, significance of related risks, size of entity, nature of the entity, diversity and complexity of entities operation, legal and regulatory requirements, the company's applicable component and internal control, the nature and complexity of the systems, and whether how specific control individual or in combination prevents, detects and corrects the material misstatement. So are all controls relevant for audit? Like not all, but here are some matters that you have to take. First one is materiality, significance of related risk, size of entity, nature of entity's business, diversity and complexity of entity's operations, legal and regulatory requirement, and the component of internal circumstances and applicable component of internal control, nature and complexity of the systems, and how the specific control like individual and object in combination prevents, detects and corrects. So miscellaneous topics no need bro. Internal control both in financial and this one no. Risk assessment procedure, first it includes inquiry, observation, inspection and tracing transaction through information system and financial reporting. However, inquiry is not sufficient and understanding the entity is not equivalent to testing, and manual controls required evidence in different periods, and unlike automated transaction consistency due to IT processing and contingent on evaluation, and this one okay. Advantages of role and evaluation of internal control by auditor and its role. Okay, role or advantages. So internal control system is adequate and you have to, it enables auditor to ascertain whether internal control is adequate and operating effectively. It is able to prevent, detect and correct a material misstatement. It properly safeguards asset. It ensures the correct recording of the transaction, reports certificates and provides management are reliable, and IC are weak or excessive in particular area. Effective internal audit department suggestion can be given to management to improve the IC. Extensive substantive procedures are required, and audit procedures are techniques need to be changed in planned ones. So roles or advantages. So it enables auditor to ascertain whether the control environment is adequate and whether it prevent, detect or correct misstatement. It properly safeguard the assets, and it ensures the correct recording of transaction, and reports and certifications are reliable, and whether IC is weak or excessive in some particular area. And internal audit department, effective internal audit department is there, and suggestion can be given to IC management. Intensive substantial procedures are required or not, and audit procedures are technique need to be changed in audit one. So formulate audit program after understanding the internal control. So audit can be formulated only after he has satisfactory understanding of the internal control, and this one bro, this one just study. Okay. Evaluation of internal control methods. So there are 4 methods in review of IC: narrative, checklist, questionnaire and flowcharts. Narrative method is a complete and exhaustive description of the system developed by the auditor after actual testing and it is recommended for small business with no formal control system. Narrative records, it is a complete and exhaustive description of the system developed by the auditor after actual testing and observation recommended by for small business and with no formal. There are 3 disadvantages. The first one is it is very comprehensive and quite difficult to understand. It is to identify gaps and weakness in the system, to incorporate changes arising on the account of reshuffling of manpower. And checklist. So checklist is a series of instructions or questions framed consider desiring elements of the control which is audit staff members follows and answers on the job, and making initials against completed instructions with answer maybe yes or no or not applicable. This is not that important. Okay, and this one is important. Internal control question. It is a comprehensive series of questions concerning the internal control. This is the most widely used form for collecting information of existence, operation and effectiveness of internal control. An important advantage of questionnaire is that oversight or omission of significant interval control is likely to occur. Okay, it like oversight and omission of significant internal control review procedures are likely to occur within this method, and the proper questionnaire proper questionnaire all internal control evaluation can be completed on one time or in sections, and it can be more easily be in interim basis. So the questionnaire generally are so framed so that yes answer denotes satisfactory position and no suggest weakness, and provision is made for explanation for the details of no, and in respect of questions are not relevant, not applicable, reply is given, and the auditor sends a questionnaire to the direct client or for completion by relevant staff. Inconsistency is found are clarified through discussion and leading to report of deficiencies and improvement recommendation. Then last one is flowchart. It is a graphical representation of each part of company's system of internal control. It is the most concise way of recording the auditor's review of system, and it minimizes the amount of narrative explanation by achieving the presentation not possible in any other form. And it gives a bird's eye view of the system and flow of transaction. It will help to understand and evaluate the internal control in a correct perspective and identify efficiency. I hope you understand this. Thank you. Yeah, chapter 3b response to the assess risk. So it is a essay 330 auditors response to assess risk. So the main objective here it is to obtain the sufficient and appropriate audit evidence about the assessed risk of material misstatement through designing and implementing appropriate response to the risk. Okay, so responsibility responsibility, this is important. So the first thing is the auditor shall design and implement overall responses to address the risk of material statement at financial level. Second, audit shall design and perform. First here it is design and implement, and here it is design and perform further audit procedure whose nature, timing and extent are based on the responsive to assessed risk of material at assertion level. Here it is financial level, here it is assertion level. Then designing further audit procedure to perform. Designing the further audit procedures to be performed, the auditor shall consider the risk of material misstatement. So testing of internal control, meaning an audit procedure designed to evaluate the operating effectiveness of the control and preventing, detecting or correcting the material misstatement at assertion level. What is internal testing of internal control? Audit procedure designed to evaluate the operating effectiveness of the control and preventing or detecting and correcting the material misstatement at the assertion level. Done. And designing and performing test of control, the auditor shall obtain more persuasive audit evidence. The greater reliance of audit places on effectiveness of a control, the higher level of assurance may be sought about operating effectiveness of control when the approach adopted consists primary test of controls in a particular where it is not possible or practicable to obtain sufficient and appropriate audit evidence on a substantial form. Okay, and just leave this. Nature and extent of controls. So in designing and performing test of controls, the auditor shall perform audit procedures in combination with inquiry to obtain sufficient and appropriate audit evidence on the operating effectiveness of the controls. It includes how the controls are applied relevant times during the audit, the consistency, how they were applied, and by whom and what means they were applied. Okay, then determining whether the control are to be tested upon other controls also, whether this control are tested with other control, and if so, whether necessary to obtain sufficient and appropriate audit evidence on the effective operation of indirect control. So even inquiry alone is not sufficient to testing of operating effectiveness of the control. In regard, inquiries combined with inspection or reperformance may provide more assurance than inquiry with observation, since observation is pertinent only to the point of time which it is made. So the nature of particular control influences the type of procedure required to obtain audit evidence about whether the control was operating effectively. For example, if audit evidence is obtained on operating effectiveness documentation, I shall decide to inspect it and obtain audit evidence about the operating effectiveness. Bro, simple. Next, matters to be considered to determine the extent of internal control. मतलब कितना लगाना है, how much, the extent of test of control to be decided on these matters. Okay, the first one, frequency of performance of control, this length of time during audit period, the expected rate of deviation of the control, reliance and reliability of the audit evidence, the extent of which audit evidence is obtained from test of other controls. Okay, the first one, frequency of performance of control by audit during the audit, the length and timing during the audit. Auditor is relying on the effective operating effectiveness of the control, and expected rate of deviation from a control, relevance and reliability of audit evidence obtained regarding the operating effectiveness of the control, and extent to which audit evidence is obtained from the test of control related to the assertion. Next, timing of test of control, it may be either in particular time or throughout the period. So in case of particular time, like during like inventory counting and all, and in case over a period of time, capable of providing audit evidence, operating effectively and relevant to appropriate or not. And such includes monitoring of control over a period of time or for 3 years. Okay, auditor can test of control of all important areas over the period of 3 years, and using audit evidence obtained in previous audit. So in determining whether it is appropriate to use audit evidence of about operating effectiveness of control obtained in a previous audit, he has to take some following. He has to consider the following. The first one, the effectiveness of other elements of internal control, the risk arising from characteristics of the control, the effectiveness of general IT control, effectiveness control from the previous audit, whether the lack of change in a particular control possesses due to changing environment, and the last one is risk of material statement and exchange of reliance of control. So there are 6 things you have to consider before using audit evidence obtained in a previous audit. The first one, other elements of effectiveness of other elements of internal control. Next one, the risk arising from characteristics of the control, and effectiveness of general IT control, and effectiveness of control or and its application and entity, including entity of application in the previous audit, that is effectiveness of control. And here, effectiveness of other elements of internal control, and here characteristics of the control, and effectiveness of general IT control, and here effectiveness of control on its application in previous audit, and lack of change in whether a lack of change in a particular control poses a risk due to changing circumstances. And last one, risk of material statement and extent of reliance of control. And evaluating the operating effectiveness of the control based on the results, the test of control auditor should evaluate whether the internal control are designed, implemented, and are contemplated as preliminary assessment of the control. And in case of deviation, you have to evaluate the deviation, and the evaluation of deviation may result in concluding the asset risk of control is may need to be revised, and in that case auditor would modify the nature, timing, and extent of substantive audit procedure. And these are just general knowledge things. And evaluating audit procedure, the auditor should evaluate whether the statement has been deducted by the system and indicate they're not operating effectively, the absence of material misstatement detected in substantive audit procedure does not provide audit evidence that our assertion are tested effectively, and the material misstatement detected by the audit procedure is strong indicator that the existence of a significant deficiency in the internal control. Specific inquiries by the audit when deviations from audited. Like what are the specific inquiries that auditor make when deviations of control are detected? The first one, test of controls have been performed, provide appropriate basis. Second one, additional tests of the control are necessary, and the potential risk of material misstatement need to be addressed in substantive procedure. The test of control have been performed an appropriate audit evidence. Additional test of control are necessary or not, and the potential risk of misstatement need to be addressed using the substantive procedures. Test of details is also called a substantive procedure. It consists of test of transactions, balance transactions को voucher बोलते हैं, balance को verification बोलते हैं, and substantive audit procedure. So substantive audit procedure, this is SA 520. SA 520, it means evaluation of financial information through analysis of plausible relationship among both financial and non-financial data. Okay, so analytical procedure also includes Analytical procedure also include an investigation as if necessary on identification of fluctuations or relationships that are inconsistent with other information or that differ from expected values by significant amount. Substantive analytical procedures are generally more applicable to large volumes of transactions that tend to have predictable over time. Next, designing and performing substantive procedures. So, irrespective of the assess risk of money misstatement, audit should design and perform substantive procedures for each material transaction, account balance, and disclosure. Okay, so depending on the circumstances, the auditor may determine whether only a substantive analytical procedure is sufficient or only test of details is appropriate, or combination of this substantive auditor procedure and test of details is required. Okay, the nature of risk and assertion is relevant in design. The nature of risk and assertion is relevant to design the test of details. For example, the test of details related to existence and occurrence assertion may be involve selecting from items contained in financial statement amount and obtaining the relevant audit evidence. On the other hand, the test of details related to completeness assertion may involve selecting from that are items from expected to be included in the relevant financial information and investing whether they are included. These two are not important. IFC, the term IFC is basically refers to policies and procedures put in place in companies for assurance. So this gives reliability of financial reporting, effectiveness of efficiency of operations, compliance with laws and regulations, safeguarding of assets, and prevention, detection of fraud. This one I am not going to study. Done. So chapter 3 states materiality and essay 320 materiality in planning and performing an audit. So essay 320 deals with auditors responsible to apply the concept of materiality in planning and performing an audit of financial statement. Okay, so financial reporting framework often discuss the concept of materiality and the context of preparation and preparation of financial statement in general. So they explain what. So they say that misstatements including omissions are considered as material if they individually or in aggregate could reasonably be expected to influence the economic decisions of the users taken on the basis of financial statement, and it can be a judgment about the materiality made in the light of surrounding circumstances and are affected by the size and nature of the misstatements or in combination of both. And it is also judgment about the matters that are material to the users of the financial statement and are based on the consideration of common financial information needs of the users or the group. Okay, so it is so such is presented financial reporting framework and provides a frame of reference to the auditor determining the materiality, and even if it does not include the discussion, then he can use a frame of reference. So application, it is applied both in planning and performing of the audit and in evaluating the effect of identified misstatement on the audit and of uncorrected misstatement. Okay, so materiality is not always a matter of size, a matter of relative size. Okay, so that says that irrespective of the value of the amount. So like as example, if there is statutory requirement. So the first one is like as per the division 1 of schedule 3 of Companies Act, it says that income and any item of income and expenditure which exceeds 1% of the revenue from operation or 1 lakh, whichever is higher, needs to be disclosed separately, and a company should disclose notes of account the shares held in the company by each shareholder who is holding more than 5% of the shares. Okay, determining the materiality helps in judgment for judging determining the entity of risk, RAP risk assessment process, identifying and assessing the risk of material misstatement, determining the nature, timing, extent of other audit procedure. Okay, so determining the materiality is a matter of professional judgment. Okay, so and auditors possession of the financial information needs of the users of the financial information and is affected by the auditor's perception and financial information and needs of the users of the financial information. So when he audits now, he assumes that the users of the financial information have reasonable knowledge of the business or economic activities and understand the financial information that are prepared, presented and audited to the levels of materiality, and recognize the uncertainty inherent in the measurement of amounts on use of estimates judgment and make reasonable economic decisions on the basis of information. Okay, first one, reasonable have reasonable knowledge on the business, understand the financial statement that are prepared, presented, and audited on the levels of materiality, recognize the uncertainty inherent in the measurement, and make reasonable economic decisions on the basis of information of the financial statement. Determining the materiality and performance materiality. So materiality, when establishing the overall strategy, the shall determine the materiality of the financial statement as a whole, and what is performance materiality, and the amount or the amounts set by the auditor less than the materiality for the financial statement as a whole, to reduce to an appropriately low level the probability that the aggregated misstatements that the aggregate of misstatement like exceeds the financial statement as a whole. Okay, so in specific circumstances, now there is one or more particular class of transaction, account balance, or disclosures for which material statement misstatement is less amount. So in that case, it could reasonably expected to influence the economic decisions of the users, and the performance materiality is also known as tolerable misstatement. Okay, done. And the factors giving indicators for to determine the performance materiality, requirement of law, regulation, disclosures depending on the industry, specific item important to the users of the particular users in a particular case. What is benchmarking? Benchmarking is one recognized method which is used by auditor to determine the materiality. Under this method, the percentage is often applied to the chosen benchmark at the starting point to determining the materiality in the financial statement as a whole. So the auditor has to applies professional judgment in determining the materiality, choosing benchmark, and this one. Okay. Then factors that may affect the identification of appropriate benchmark. What are the factors that will affect? The first one, elements of the financial statements, and the items which attention of the users are particularly there tend to focus, and nature of the entity, where entity has its life cycle and industry, economic and ownership structure, and volatility of the benchmark. The first one, elements of the financial statement, attention of the users, where it is focused, nature of the entity and its life cycle, ownership structure and the financial pattern, and the volatility of the benchmark. So some examples for suitable benchmarks, depending upon the various circumstances, it may be reported on profit before tax if it is a profit oriented entities, and if it is doing a public utility programs, in that case total cost or net cost, and where entity has a custody of an asset, it may be set appropriate benchmark. Percentage may be applied on the profit for continuing operation, is normally higher than the percentage of total revenue. And this, and I'll just go through revision of audit progress. Okay, so can you revise it? The materiality of the financial statement as a whole in a particular case of transaction balance may need to be revised as a result of, in three cases it may be revised. The first one is change in circumstances, new information, change in audit understanding. So change in circumstances of the audit during the audit, for example decision of dispose of major part of the business, and any new information just such as fraud, and change in auditor's understanding, matlab before he understood something and now he understood something. Okay, done. And documenting the materiality, and first what are the four things you have to document? The first one, materiality of the financial statement, and if applicable, materiality level or the level of particular class of transaction, account balance, and the disclosure, and then in performance materiality, and the last one, any revision in ABC. Okay. And then last is about materiality and auditors. This one, in conducting the financial statement, overall objective of the auditor is assurance of financial free from material misstatement, and express an opinion prepared on all material aspects and according to financial report and recommended according to the assessment, according to the and audit risk is that expresses an inappropriate opinion when the financial statement are materially misstated, and audit risk is a function of risk of material misstatement and detection risk. Materiality and audit risk, this one is important. Materiality and audit risk are considered throughout the audit, in particular when in three cases: identifying, assessing the risk of material misstatement, determining the nature, extent, and timing of further audit procedure, and evaluating the incorrect misstatement. Okay, and informing the opinion. In three things, materiality and audit risk are considered throughout the audit. First one is identifying and assessing the risk of material statement, determining the nature, extent, timing of other audit procedure, evaluating the effect of material misstatement, if any, and informing the opinion. So relationship between materiality and audit, there is an inverse relationship between materiality and degree of audit. Accordingly, if we have high risk in the organization, we should keep our materiality low, and risk have three components that inherent in this one, and in company, low inherent risk and control risk are also low, and auditor keeps his high. But if risk are high, then auditor keep his material low so that he can do greater number of misstatements. Thank you. So chapter 3D, it is automated environment. So An automated environment is basically a business environment, refers to a business environment where POAD, process, operation, accounting, and even decisions are carried out by the computer system, also known as information system, also known as information technology. So, fundamental principle of an automated environment is to carry out the business with less manual intervention and more system driven. Okay, so the complexity of the business depends upon the level of automation. So if there is more automation, it is more complex. Then it uses software to initiate like ERP. So what are the key features of automated environment? The first one is it enables faster business operation, accuracy in data, and ability to process high volume transaction, integration between business operations, better security and control, less prone to human errors, provides latest information and connectivity and network capability. First, once again, faster business operation, accuracy, large volume transaction, integration between business, better security and control, less prone to human errors, provides latest information and connectivity and networking, and understanding and documenting the audit environment. So like some of the points to obtain understanding of the entity. The first one, information system, their purpose, location of information system, architecture, version, interface, in-house or packaged, outsourced activities, and key persons. So after that it should be documented. Okay, so what are the like points to understand the automated environment? Okay, first one is information system, their purpose, location, architecture, version, interface, in-house or packaged, outsourced activities, and key persons. So understanding the risk that arise from the use of IT system. What are the risks that might arise? First one is inaccurate processing of data or processing of inaccurate data, unauthorized access of data, and direct data changes, and access or privilege access, lack of adequate segregation of data, unauthorized changes, and failure to make necessary changes, and loss of data. So one is inaccurate processing of data or processing inaccurate data, unauthorized access, direct data changes or access or privilege changes, lack of segregation of data, unauthorized changes, or failure to make necessary changes, and loss of data. And what are the impact of IT related disease? So it has impact on 3 levels. First one is substantive audit, through testing of data and non-reliance of controls and modification in control. First, in case of substantive audit, first we may not be able to rely on the data obtained from the system when such risk exists. This means all forms of data, information, and report that we obtain from the system for the purpose of audit has to be thoroughly tested and corroborated with completeness and accuracy. Okay, so when it comes to controller, we will not be able to rely on the automated controls, calculations, and procedure that are built into the operation. So additionally, we have to perform audit work. Then modification in report. Where was I in Jan? Modification in report. So third, due to regulatory requirement of the audit to report in IFC internal financial controls of the company, the audit may also have the modified in some instances. So types of controls: general IT control, application, and IT dependent control. General IT control is simple. It is pervasive control applied to all system components, processes, and data for given enterprise or the system environment. For example, information security policy. Okay, so general IT controls and maintain integrity, and data commonly include what they include: data center and network operations, program change, access security, application system acquisition, development, and maintenance. Okay, so in everything, na one line is common. Wait, one line is common. Everything, whatever the thing they have told you, it is processed to meet the financial reporting objective. Okay, so this may include overall management, preparing schedule, batch jobs, monitoring performance, and I'll just go through this. Okay, I don't think you'll write this. Application control. So application includes both automated and manual controls that operate at business process level, and application controls are embedded in IT applications like ERP and helps in ensuring completeness, accuracy, and integrity of the data. So examples are edit checks, sequence number checks, use of limited checks, reasonable checks, and even mandatory data field. So IT dependent control, the third types. So these are basically manual control that makes use of the data information produced into IT systems and applications. So in this case, even though the control is formed manually, reliability of so design and effectiveness are dependent upon the reliability of data. Okay, Then general IT control versus application control. These two categories of IT controls are interrelated. The relationship between these two are such that the general IT controls are needed to support the functioning of application control, and both are needed to ensure the complete and accurate information processing through the IT control. Then testing of methods in automated environment, testing general load. So there are basically 4 types of tests. The first one, inquiry, observation, inspection, and reperformance. Inquiry is the most efficient and also gives the least audit evidence. So hence inquiry should always be combination with one of the other testing methods. Inquiry alone is not sufficient, we all know. But when it comes to reperformance, it is most effective and gives best audit evidence. However, testing reperformance could be very time consuming and least efficient. So generally inquiry in combination with inspection gives the most efficient and effective audit evidence. So which audit test to use in combination of is a matter of like professional judgment. So this may vary. So which audit use risk assessment, control environment, desired level of evidence, history of errors, and complexity of business assertion. And this, when testing an environment, now what are the common method that we follow? So now understanding the automated environment transposes by we do walk through and observe how user processes in different scenarios and inspect the configuration in defined in the application. First we go through walkthrough and how user make the transaction in different scenarios and configurations. So everything should be documented in SA320. Manual and automated control. So manual controls are considered less effective because of these three. First, manual control are performed by people who are less predictable than IT control and more error prone. And then manual controls are more easily bypassed and ignored and overridden. Then manual control subject to simple errors. Because first one, it is done by less practicable and more error prone. It is ignored and overridden and subject to simple errors and mistakes. Okay, where general IT is suitable, where judgment and discretion are required. First thing. Second one is where too large, unusual, and non-recurring transactions are there. When non-routine transactions they define, anticipate, or predict, and when controls where a control response to require outside the routine, and when monitoring of effective information processing control, where it is suitable. First one, where there is unusual data, when there is non-routine data, when the control response is outside the routine, and when monitoring the effectiveness of information processing control. Circumstances in which manual controls are less suitable. In 2 cases, where there is high volume recurring transactions and where control can be adequate when controls a specific way. Okay, so this one, risk assessment process, understanding and evaluate audit approach in automated environment. Risk assessment process. Risk assessment, understand and evaluate test of operating effectiveness and reporting, and data analytics for audit. So the combination of processes, tools, and techniques that are used to tap vast amount of electronic data to obtain meaningful information is called data analytics. The combination of processes, tools, and techniques to tap the vast amount of electronic data to obtain meaningful information is called data analytics. Auditor use kind of similar kind of tools to obtain good results, and the tools or technique that used by applying principal data analytics are known as CAD, that is computer assisted auditing techniques. And application of data analytics can be used in testing of electronic records and data residing in IT systems. So this can be using spreadsheet or specialized audit tools such as ID or ACL to perform the following: to perform completeness selection of audit samples, computation, reperformance, analysis of general entries, fraud investigation, and evaluation of impact of control deficiencies. So what is general audit? It is just assurance of effectiveness of IT systems, and this one is already asked. So done with chapter 3. Yeah.